Welcome to a high-level look at true corporate autonomy in the year 2026. For generations, entrepreneurs have been forced to tie their personal financial identity to their commercial ventures. When you apply for a standard business credit card, banks demand your social security number, force you into a personal guarantee, and place the entire risk of your enterprise onto your family's shoulders. This old model is fundamentally flawed and prevents real corporate scaling. Today, we are exploring the elite strategy of securing business credit cards using strictly your employer identification number with absolutely no personal credit check. This means your personal credit report remains completely invisible to the lender. There is no hard pull, no soft pull, and your personal debt-to-income ratio remains entirely pristine. We will examine the exact corporate architecture required to separate your personal life from your business identity, look at the modern platforms driving this shift, and map out a step-by-step plan to build an independent corporate credit profile that commands respect from major institutions. To successfully navigate the world of EIN-only corporate credit, you must first understand the fundamental shift in legal liability. When you obtain a card based solely on your employer identification number, the lender is extending credit directly to your business entity itself rather than to you as an individual. This process completely eliminates the personal guarantee. If your business encounters severe financial hardships in the future, the creditors cannot touch your personal assets, your home, your bank accounts, or your personal credit score. Because the risk is entirely borne by the corporation, lenders do not care about your personal score. Instead, they utilize advanced digital underwriting models that analyze your corporate validity, your industry classification, and your operational cash flow. This creates an incredibly clean, professional separation where your business stands entirely on its own 2 feet, based strictly on its own financial performance. The first major asset class we must analyze in the EIN-only space is the modern corporate charge card powered by financial technology networks. Platforms like BRICS have completely revolutionized how established businesses and funded startups access capital. When you initiate an application with BRICS, they explicitly skip the social security number requirement for underwriting. The system evaluates your company by scanning your corporate registration documents, verifying your ownership structure, and securely linking to your primary business banking records. If your company maintains a solid cash cushion or demonstrates consistent incoming revenue, you are cleared for approval instantly. The credit lines granted by these systems are often significantly higher than traditional consumer limits because they are scaled dynamically against your actual business reserves. It functions as a strict 30-day charge card, enforcing incredible financial health while building a powerful commercial history. The next dominant force in this credit category is the RAMP corporate card. RAMP operates with an absolute commitment to helping businesses scale efficiently without personal liability. Their automated system requires zero personal credit checks and leaves your consumer reports completely untouched. RAMP utilizes proprietary software algorithms to assess your corporate financial velocity by analyzing your daily sales and deposit patterns. If your business shows consistent financial momentum, you receive an elite corporate card with zero personal strings attached. The defining advantage of the RAMP ecosystem is its advanced internal tracking dashboard. The software automatically scans your recurring corporate payments, alerts you to redundant software bills, and helps you optimize your daily overhead. You also receive an unlimited flat 1.5% cash back on every single operational purchase, making it an exceptionally profitable tool for scaling your corporate empire. Another highly disruptive and specialized player in the EIN-only market is the Pauper card. Parker has engineered a unique credit model that caters directly to high-volume digital brands, e-commerce, store owners, and media buyers who need massive short-term capital to scale operations. Parker completely removes personal credit scores from their underwriting model. They analyze your corporate identity by connecting directly to your active payment processors like Stripe, Shopify, or Amazon alongside your business bank accounts. If your digital dashboard displays robust, consistent sales data, Parker will instantly issue credit lines that scale dynamically with your daily revenue. They provide highly flexible corporate repayment structures, including net 14 and net 30 terms. This allows you to aggressively deploy capital into digital advertising or inventory acquisition and settle the balance smoothly after your marketplace payouts clear. If your company is in the earlier stages of development and does not possess massive daily sales volume yet, you must immediately leverage the power of trade credit networks. These are commonly referred to as net 30 vendor accounts, and they represent the absolute foundation of EIN-only credit building. Major suppliers like Hewling, Quill, and Granger offer business accounts that allow you to purchase office supplies, shipping materials, or corporate equipment today and pay the invoice in full within 30 days. These companies do not check your personal credit score. They approve your account based strictly on your verified EIN and clean corporate registration. The secret strategy is to open 3 or 4 of these vendor accounts and make small routine purchases that your business actually needs. When you pay these invoices early, the vendors report your immaculate payment behavior to commercial bureaus like Dun & Bradstreet, rapidly establishing your corporate credit score out of thin air. Let us transition into the exact technical configuration your business must possess to successfully clear automated EIN-only underwriting systems. Because these lenders are taking on corporate risk without a personal fallback, their automated compliance software is incredibly strict. Your company cannot look like a loose hobby. First, you must form a proper legal entity such as a limited liability company or a full corporation. Operating as a sole proprietor makes true EIN-only credit mathematically impossible. Second, your business must be listed accurately in public databases and commercial registries. Ensure your corporate name, address, and phone number are perfectly uniform across your state, filing your corporate bank account and your tax documents. Even a tiny mismatch like writing street instead of avenue will cause the automated underwriting system to flag your application for fraudulent data and trigger an automatic rejection. You must also establish a dedicated corporate identity footprint online. Automated algorithms run